I think the Irish property market is a scam. Indeed, I don't think it's at all clear that there's a bubble in Irish house prices at present. A bubble usually occurs when prices become artificially high. That's because large numbers of people buy in the belief that they'll be able to sell on quickly at a substantial profit. But the vast bulk of people buying Irish property at the moment are not doing so because they want to make a quick killing. It's because they want to have their own roof over their head, or they see property as an attractive long-term investment. Often that's because they want to ensure their children will be able to afford houses in the future. It is true that Irish property prices have risen sharply in recent years, but this is because it has been a remarkable time for the economy as a whole. Ireland's population has grown dramatically, particularly in those age groups that are actively seeking houses. Living standards have risen dramatically, and an extra 600,000 people are at work. Income taxes have fallen, and mortgage interest rates have now collapsed to the lowest levels in more than 50 years. All these factors came together at the same time to create an amazingly successful Irish economy, and a very strong property market is a natural result of that success. In the past couple of years, the world economy has suffered a series of shocks, ranging from a severe slowdown in the technology sector to terrorist attacks in the States and a war in Iraq. But the Irish economy and the property market have held in remarkably well. This gives a measure of confidence that the gains in recent years will not be easily reversed. Going forward, Irish economic growth will be altogether more modest, and interest rates will eventually rise. So it's most unlikely that property prices will increase anywhere near as quickly as in the past. However, it is at least as unlikely that we'll see a sustained sharp decline in property prices. Because the economy should remain healthy, I fully expect that Irish house prices will continue to rise, albeit at a fairly moderate pace in the years ahead.
Okay, thanks for that, Austin Hughes. So you've heard our two experts set out their cases. In a few minutes, David McWilliams and Austin Hughes
are running about 0.5% of the population, or 1% of the workforce. So the impact on the Irish economy is really altogether dramatic, and on the property market it's set to be extraordinary.
They seem to think it's time to sell. A peak has come.
Well, I don't think that's the case. I think that's really to help their lending, their balance sheet. So I think there's still very strong confidence in the market as a whole. I don't doubt. I think we are seeing the end of an era of soaring prices, and that's very good news for both buyers and sellers. I think we are instead, though, seeing a transition to what's going to be a calmer market. We're taking some steps down, and in certain segments of the market it's a little bit bumpy. Undoubtedly, interest rates have played a role. I think as well that there were areas of the market that simply had overstretched themselves. As Richard says, there were areas that had gone up by 20-30% in the first couple of months of this year. So that couldn't last, and we're seeing that in the auction rooms today.
But I mean, if you look at those auction rooms, you know, one of the Richard Curran was talking about was confidence. That's very important. There obviously is a lack of confidence. People are not going in there this week and buying those properties.
Well, perhaps at that area of the market, but certainly if you look at other areas, if you look at new housing developments, you're seeing confidence there in people turning up, and very, very strong new home sales in those areas. I think in general in the broader market there is still strong confidence because we still have a very healthy economy. We still have relatively attractive borrowing costs. The reality is someone can borrow now for 3 years and still borrow as much as they did last December. So I think that the constraints are fairly modest. There is some question about confidence. I think some of the government's suggestions about stamp duty, and before that about possible capital in 1997. People have been talking about property being overvalued back then. Property prices have risen about 300% since then. The economy has generated a phenomenal amount of new jobs outside the property sector. And in those circumstances, it's very often difficult to track exactly what the fair value of property should be at a point in time. Confidence is the real problem at the moment. Confidence is the problem in the financial markets we're talking about. It's the problem in the property market at the moment. You know, we talked about...
But it's more than that, isn't it, to be fair? Dan O'Brien there earlier on was pointing out we have another problem here, that, for example, if there's a US recession, you're employed by someone like Google or Dell or Microsoft, you'd be worried about your job, and the economy should be worried about the impact there as well.
Yeah, well, we would have had much the same conversation in 2000, 2001, the last US recession, and as Dan also mentioned, we've had probably the strongest 4 or 5 year period for world economic growth since. One of the issues is that we talk about recession as though it's a world-ending event. The average recession in the US over the since the Second World War is about 10 months in length. You know, we do have these downturns, and as we see in the actions of the US Central Bank today, they get on with it. They make significant adjustments. Interest rates come down. There is a fiscal plan to resort the economy, and, you know, some of the viewers out there have to be aware that US companies will make decisions about jobs. So it isn't a fairy story where there is a uniquely favourable softening there, but you do get events and you see an upturn. The average downturn, as I say, 10 months, average upturn 57 months.
And let's go back, Dave McWilliams, to 2000, 2001.
Probably less than 3% this year. But as we've seen in past recessions, this gives way to an upturn, probably into 2009, where growth and employment continue to rise, maybe quite strongly.